Iran ceasefire is extended, but peace negotiations are stalling. How do we trade that?
Hello, everyone. This is Andrew Market Prep, and let's get into today's sentiment narrative and what's going on the charts today. So, what's the narrative currently? The focus now is on Iran and, the conflict and the asset that's kind of like an indicator for the global sentiment is obviously the oil. You can see the gray line here, gray line chart. And we can see here, up here is the dollar, the candle chart. The yellow one is the gold, and the brown one is the copper. So yesterday, we had a pop higher in dollar and in oil due to sort of escalation in the Iran situation, where they basically closed the Strait of Hormuz, and even though Trump doesn't mind to extend the ceasefire, but in fact, nothing is coming through the Strait of Hormuz freely. So the tension is still there. And we can see this from the chart of the dollar index that is that popped higher yesterday. And today it's kind of consolidating, pulling back, stabilizing, we can say. And the overall sentiment is quite mixed. We can see that major indices such as DAX, NASDAQ, Dow, Hang Seng, Nikkei, China A50, all of them are down on pessimism around this situation, because there's no clear resolution, even though Trump extends the ceasefire, but Iran is not it doesn't really propose any solution either. So the situation is quite hanging, even though at the background the ceasefire is extended, there's no military strikes. So I would say it's leaning slightly risk on, and we can see this in FX market. Here's the broad view down here. We can see that Aussie and NZD are leading today, and yen as well, which makes the situation is quite mixed. So the sentiment is overall mixed today. Now, let's get to the charts. I'm looking at Nikkei today. We had trade balance release in early morning. Let me see the economic calendar. So here, April 22nd, we had balance of trade, less than consensus, but still way more than the previous release, which seems like helped to support the index. So in my time frame, in my time zone, Jakarta time, around 6 a.m. was the release. 650, right? This candle. The index popped higher. So definitely investors perceived it as a positive thing. And we are consolidating near all-time highs right under 60,000. And to me, it's interesting to see if we can break up higher above 60,000. And if we do, I would like to see at least a 4-hour candle closing above 60,000, and I would consider going long. Also, another risk-on setup might be in NZDUSD. We can see that we are consolidating above 0.59, and if we manage to break up above 59.20 and close on 4-hour chart, to me that would be a strong bullish setup. Why I picked NZDUSD is because yesterday we had a quarterly inflation rate release, and it printed 0.9, which is above the consensus, and market reacted positively to that. Let's look at the 1-hour chart. So my time frame, my time zone, it was released at 5:45 a.m. Here's 5:45. Here's the candle. So the market perceived this release positively, and we have an additional bias to buy Kiwi, okay, Kiwi dollar. So the overall trend, the short-term trend is up, and we have additional bias for NZD, and I'm looking for a breakup above 59.20 to consider longs. Okay, so but what if we have some bearish catalysts? Let's say the conflict escalates. Let's say even the ceasefire ends and the strikes happen again from both sides, or even let's say Iran or US start using some aggressive language again. So that would mean we would look for bearish setups. We would look for short and risk on assets. And I like how FTSE looks here. We had the consolidation around 10,650 and 10,550 around here, and we broke down the this inclined support. I wish I shorted right away during US opening, but me personally, I'm uncomfortable chasing moves after such a stretched move, 3 hours without pullbacks, and then you short. Like the stop loss could be pretty wide here, which made me kind of uncomfortable. That's my ongoing issue that I gotta work on. But anyway, here I'm waiting for a deeper pullback, possibly to 0.5 Fibonacci retracement. I set an alert here, and if there's any escalation, any risk of catalyst, I would look for short in FTSE. We are under 10 days moving average as well here. Another FX pair to trade the risk of sentiment would be Euro-Yen. Here we have a nice level at 187, which would I consider a critical one. So if we break below and close consolidate below this level, I would consider shorting this pair, trading risk of sentiment, potential risk of sentiment. Now, why particularly euro yen? Now, if you look at dollar yen, we have dollar yen near all-time highs, not far from all-time highs. And when this happens, normally a Bank of Japan threatens the market with intervention, and eventually they do intervene. And when it happens, the dollar drops wildly, and we cannot control the risk. So I don't want to be trapped in that scenario, and I would rather short euro against yen and avoid intervention risk. So basically, let's say if dollar yen strengthens further, Bank of Japan decides to intervene, sells dollar and buys yen. So if I'm shorting euro yen, it would drop even further down. That's why I prefer trading risk of sentiment against yen. So basically, sell whatever against yen. Okay, and Aussie dollar also looks good. We can trade risk of sentiment when it breaks below this triangle and closes somewhere at or below 10-day moving average. But again, this is a risky thing because you're basically buying dollar, and in case of intervention, it's hard to control the risk. So that's it for today. I have my 4 favorite setups, and let's see what catalysts come out shortly. Keep an eye on headlines. This period of market sentiment is pretty hectic, as every headline from Middle East can cause sharp reversal in the sentiment. So yeah, keep an eye on upcoming news. Also, economic news that might affect the market would be PMIs tomorrow. However, as I said before, now the market is focused on oil and risk sentiment related to Iran conflict. So that's the plan for today, and trade safely.